Buying your first home can be both exhilarating and terrifying. It's a goal that most of us hope to achieve. However, the financial implications, bond and interest rates, insurance, rates and taxes, maintenance, call for careful consideration. Dominique dHotman, Chief Strategy Officer for Ooba Home Loans, and Nicolette Titus, Agent with Pam Golding Properties, help us to unpack these expenses and provide tips to ensure you secure the property you need for the best possible price. I'm your host, Erica Liebenberg, editor at Just Money.
Dominique and Nicolette, thank you so much for joining us this afternoon. It's just lovely to have you on our podcast.
Lovely to be here.
Yes.
I'll kick us off with our first question. And this one relates to the interest rate drop that we saw certainly over the period of COVID, which is something we can come back to. And it certainly seemed as though it was very much a buyer's market with the interest rate being what it was. Would you say that the housing market is a buyer or seller's market right now? And is there a specific time or season or period within the year that people should look to buy that tends to be a buyer's market? Perhaps we can start with you, Dominique.
So a buyer's market typically finds where the conditions are more favorable for buyers.
Mm-hmm.
Those things are usually driven either by oversupply. So people are trying to sell properties and there are more properties for sale than there are buyers. And so buyers are having to drop their prices. When you say a buyer's market, that's what people think about. There was a little bit of that, but it was more driven by cost of finance. So it's not so much that there was an oversupply of stock, because generally in South Africa, we have a shortage of housing stock. Historically low interest rates made it more affordable for new buyers to come into the market and for existing homeowners who found themselves in changing conditions to buy assets.
Yeah, with regards to our current economic situation, there isn't a specific time of the year where prices are preferably lower and more financially beneficial for a buyer. However, a buyer needs to consider whether there is a high or a low supply of houses available. So supply greatly affects the prices of the houses. So when the supply is low, sellers significantly increase the price of their homes. So therefore, the most important factor to consider is your financial situation. And it is important to be financially ready to cover all costs such as the bond and transfer fees and, if possible, a deposit if a bond is not granted. So it seemed pre-COVID that we are now having a better interest rate. However, the interest rate is steadily increasing, which may affect the buyer's affordability. So we do foresee that the buyer's activity is steadily going to decrease due to factors such as the rising cost of living and fuel expenses and the increase of the electricity, etc.
So Nicolette, just picking up on something that you said there, and, you know, the affordability issue obviously being ongoing and, you know,
Yes.
when the financially the time is right is a good time to strike, I suppose. But within that parameter, it's that option of looking for high or low supply times. So how does somebody go about that? How does somebody who's a layperson, who's not in the property market as such, determine whether there's an oversupply or undersupply? And of course, Dominique's already mentioned that there's generally an undersupply of housing in South Africa. But how can a new buyer, a first-time home buyer, determine that there's a low or high supply?
With the interest rate as it is, it does affect the supply because of sellers taking advantage of the interest rate. But for a normal person on the street, needing to know when they are financially ready to purchase a property is if they have done the homework and they've actually done the exercise to see, look, I'm ready to buy financially. It is a personal choice, and with the market fluctuating, it is a personal choice when you're ready financially.
And I suppose in terms of looking at the supply, it's a matter of keeping an eye on listings.
Correct.
You know, and just seeing
Correct.
what sort of supply there is in the price range that you're looking at,
There
and to make that part of your feasibility study.
Definitely.
One of the options that seems attractive and perhaps seems viable for somebody who's perhaps not quite yet in the financial situation to look at procuring a house is the rent to buy model. What is rent to buy? Is it as it sounds, and how does it work?
So rent to buy is a finance mechanism in South Africa, at least typically offered by non-bank lenders. So how it works is it's an installment sale. So essentially the property is sold, but the ownership of the property is not transferred to the buyer until the final installment is paid. And so there are different types of arrangements, but often property developers will look to offer rent to own as a finance solution. They can try to attract tenant owners into units at a cost that is below what it would cost the outright purchase. Essentially in the intention or in the hope that as the individual or as their household's income increases, that the installments can be increased until the eventual transfer can occur. So how it differs from an outright purchase is a buyer and a seller would agree, okay, we're going to sell this property. The buyer would go to a bank and say, I need a loan for 500,000 Rand. And the bank would then issue that loan after their assessment. That 500,000 Rand would be paid as a lump sum. And in a rent to own scenario, there is typically a deposit required, but the seller is receiving the payments over time. And then the eventual transfer of the property only occurs after the last installment.
Okay, so what sort of time period would that usually run over? Because a traditional bond time period would be 20 years. The 30-year home loans seem to be disappearing to an extent, but what sort of installments then? Your installments would be quite high.
In South Africa at the moment, I think there are probably only 2 or 3 non-bank lenders that are offering this, because you still have all the transaction costs, and the transaction costs being the transfer, the change of the deed, the endorsement of the deed in the deeds registry. You'll find that they have a similar sort of time period. And in some situations, they'll do shorter terms, like a 7 or a 10-year term, where they look to try and then do the full transaction or do a sort of a bulk payment at that point.
Almost like a balloon payment for a car.
Yes, and that would be refinanced. It's not a very popular finance product in the South African market because it's the benefits that one would expect to find from a rent to own would be a reduced cost and making it more accessible. But given a lot of the transaction costs, legal costs, transfer duties, and those things that still exist, the cost reduction is not as significant. And so it's not as popular as it is in some other markets.
It's just interesting because I'm finding it a little hard to differentiate between that and an actual traditional bond. The only thing that I can think of is it the case, therefore, that you can back out of it and that your installments become the rent that you would have paid in those months and you can walk away? Is there that flexibility?
No, you still have the finance agreement. How it sort of technically works is that the deed is transferred in the deeds office, but it's endorsed. And so it's as difficult. And if you default, you have all of the same issues.
So really, it sounds a little bit as though basically the big difference is you're not borrowing from the bank. You're borrowing from someone else.
Yeah.
And the interest rates, are they usually the same as a bank would give?
They're similar. They also are driven by the creditworthiness of the buyer.
Right. Okay. Interesting. Not something I think I'd probably go for, on the face of it, if it sort of carries the same responsibilities and commitment as a bond. If you want to buy in an estate and those are the terms and conditions of buying within that estate, then that's something you would certainly look at.
A big driver of the popularity is the reduction. So it should be increased flexibility in respect of access. So non-bank lenders would sometimes have alternative scoring models for things like self-employed people. And so that's one angle. And the other one is where the cost is lower. So property developers often try to use this as an alternative when they have unit sales.
So in terms of actually securing a home loan and buying a house, for first-time buyers, what are the basic steps involved?
For securing a home, you need to have your credit score, knowing that you are credit worthy. And therefore, when you do have a relationship with a bond originator like Ooba, you can have the advantage of getting a pre-qualified certificate. And with a certificate, that gives you the advantage of looking at prices, properties in that price range that you qualify for. When you do put in an offer on a property, the seller then can see that this is a solid offer, and this is a serious buyer, and I will give this client an opportunity then to give them a bond. So at least they've done their homework. They know that they are not going to put in an offer that might be rejected because of no affordability.
Okay, that's interesting. I see a lot with property sales that a lot of folk, and I saw this a lot during COVID, especially, that may not particularly have referred to that period of time. People were saying not bonds, cash sales only. Would someone who has said that be more likely to be a little bit more flexible on presentation of a bond origination certificate pre-qualification?
Cash is always where people feel that it takes time from the transaction where they don't need to apply for a bond. However, if you do have cash, you need to secure giving the seller proof that you do have the cash. People use the term as, subject to selling their property, selling the vehicle, and that necessarily doesn't mean that they do have the cash on hand. If you do have the cash and you have proof of funds, the bank can give you a guarantee check, then the seller will definitely prefer taking a cash offer than a bonded offer.
So in terms of the steps, just to summarize, it would really be to check your credit score, make sure that you're aware of your affordability, and then approach a bond originator, get your pre-qualification certificate.
That's correct.
Anything you'd like to add, Dominique, there?
That's absolutely right. The precursor for a home loan application is that you have a concluded offer to purchase. There's a binding sale agreement between the seller and the buyer. That's a precursor to any bank considering the application. The other thing that is important for buyers, especially first-time buyers, to be aware of is that there are going to be costs. You'd need to have a deposit, and even if you could get 100% loan, there will be costs to the attorney and tax. I understand from my colleagues like Nicolette that are working every day with sellers that when an agent brings a pre-qualified buyer, sellers consider those offers more seriously.
Yeah, because you can delay the process by putting in an offer and then reneging later on. It's a bit of a problem. And actually, that brings me to another question. At what point could the buyer or seller who've reached an agreement of sorts pull out without there being implications? So I've gone to view a home as a potential buyer. I've said, I like this home. I've made the seller an offer. The seller has accepted. From that point on, would there be implications if either pulls out?
With our offer to purchase, there's normally a clause where there is a calling off period, which is 5 days, and it has to be in writing. However, that is on the buyer. So if the seller is accepting the offer, the buyer will then have the 5-day calling off period. However, if the seller has got quite a good interest in his property, he would like the purchaser, the buyer, to get a bond within a shorter period of time. That is where the bond originators comes in, because they can get you a bond within 48 hours. So what the seller then can do is tell the buyer, look, I'm going to put in a 72-hour clause whereby you need to get your bond in place within that 72 hours. If not, then I'm going to accept another offer. If it's further down the line, then it becomes complicated. Then there is going to be implications on the buyer where they can lose their deposits and the buyer will be liable for agent's commission. Buying a property is an agreement between two parties which you need to be certain that I am ready. So at that stage, you guide the buyer telling them, look, if it is that you feel this property is not for you, you only have a short period of time to decide, because once it steps over to the financial part, then it becomes problematic.
And if the seller withdraws?
The same, the seller will also have to give the buyer a reason why are you cancelling, because obviously the buyer has made plans towards it, but at an early stage, the seller can say, look, you get buyer's remorse, you get seller's remorse. In this property industry, it's difficult. You are dealing with people's emotions.
I've heard in the UK, and I don't know how valid this is, I'm assuming it's relatively valid because the source who told me is pretty switched on. He and his wife were in the market. They were looking to buy a house in Cornwall in England. And he said that they would make an offer, the offer would be accepted, but then the buyer would receive, the seller would receive a better offer, and he would then get back in touch and say, I did accept your offer, but I'm now rejecting your offer. And that is legally allowable, like that as a reason, because I know the reasons that you were given, as you say, they're quite viable. Nobody could have anticipated, for example, that they were moving, the job, let's say they were immigrating, the job didn't pan out, they need to keep their house. So there are no implications, or so I'm told, if a seller chooses to just accept a better offer. There is actually a term for that. I don't know if either of you know what that term is.
It's called gazumping.
Right. Lovely for sellers, horrible for buyers. Which leads me to another question. And Nicolette, here's one for you. Should you offer more than the listing price to get the house that you want? Is that even a thing?
Yes, it is. But it happens mostly when it's a hot property, a property that is priced right. And, there is a demand for properties in that price bracket. However, the number one rule when buying a house is always offer what you can afford. So having this in mind, every pricing scenario is different. And one of the most important aspects in purchasing a home is knowing whether a seller is open to negotiation. And then when there are multiple offers on the table, the seller will typically take the higher offer. Sometimes the seller will take a cash offer offer, which is maybe less than the bonded offer, because, it can be that the cash offer will eliminate the transfer process. So yes, it happens in a lot of cases. However, when we do sit with the buyers, we tell them, offer what you can afford. You sit in front of these people and you see their faces, you see the disappointment, because they can see there's so many people interested. However, rather be safe than sorry, because you don't want to buy a property and at the end of the day, you're going to lose it. First time buyers, be careful and, have that conversation with the real estate agent and ask the question, is the seller open to negotiation? And if he is, and then you can say, okay, look, I really like this property and I can see there's a lot of interest, I will then offer more than the asking price. Money is always something that draws the card, so the seller will, in most cases, take the higher offer, but generally that doesn't always seem to be the case. So you present all offers, especially the ones that has done the pre-qualification, so the seller can see, now this is solid. So the one that is offered maybe much more than the guy that did his homework, he doesn't even know whether he qualifies for the property or not. And with a cash offer, we will also ask for proof of funds. It is a very grey area, but be open, be honest, and just tell the buyers, look, if it's an urgent sale, the seller might negotiate. But if it's not urgent, the seller will say, look, I don't really need to sell my property. The best offer will be accepted.
Where it's competitive, as you say, there's a number of factors to look at, and offering more than the listing price is not necessarily the best route of action to take, particularly if the affordability is going to become an issue.
Correct.
Here's a question. Are there costs that tend to catch people out? Not necessarily hidden costs, but costs that people tend to forget about, or they get a bit of a nasty surprise halfway through the process, in your experience, either of you?
There are some really good calculators on Uber's website, which will help you understand what those costs are going to be. So we have really good affordability calculators that you could determine what you could afford to buy. There are bond and transfer calculators where you can see very, very specific in proper amount of detail. That's going to be the bond cost, that's going to be the transfer duties and whatever. So I encourage people to use those calculators. And there's some good content there that will also help understand who those costs go to and when they will be due. And so the feedback from buyers is that those things are really helpful, which is wonderful. In terms of your question about costs that surprise people, so in sectional title properties, there are levies that are payable every month to run the sectional title. Those costs often surprise people because I think sometimes people don't know about them. They're like, oh, well, I know I have to pay rates to the council for refuse collection and water, etc. The levies to the body corporates often are a surprise. And sometimes people don't expect them at all. And other times people are not aware or they expect to pay less. I'll talk about my experience when I was a first-time buyer. The agent that I worked with there was absolutely exceptional and said, these are the things you're going to have to think about. You're going to have to think about transfer duties. You're going to have to think about this. And she said, when you work out what your budget is, you're going to pay levies to the body corporate. And I said, okay, great. That's really helpful. But this was the amount. And then when transfer happened, I moved into the apartment and then I got my bill from the body corporate and it was 1,000 Rand. This is a real problem because as a first-time buyer, I was on a really tight budget. So get proper confirmation about what those levies are going to be. And if you're going to buy into a sectional title, try and understand what the financial position of that body corporate is. Are they in arrears? Have they been doing maintenance? Because also what becomes surprising, or what is an unfortunate situation, is people just buy an apartment and it's obviously exhilarating the whole process. And then 8 months or a year into the story, they have to replace the lift.
So just in summary, if people go onto the Uber site, they look at all the calculators, not just the bond repayment calculator, but also, what they can expect for transfer duties and attorneys and so on and so on. If they work through all of those, then would it be fair to say that they've got a good understanding of what they're up for initially and with their repayments? And then to bear in mind that if it is an estate or a gated community of some kind, whether it's sectional title or you actually own the property within a gated community, there are going to be levies involved. Be aware of those as well. So those would be the two big sort of categories in a sense.
Yes.
That's great. That brings me to another question. Buying a house versus buying land and building, which is best suited to whom? And I'm actually going to share my own experience. Our first property purchase was an absolute windfall. This is one of those you never expected to happen windfalls, but it did. We purchased a property in Pringle Bay well over a decade ago. I want to say it was almost 2 decades ago. And I think we paid something like 84,000. That was our buying price. And it was 1,400 square meters. It was massive. We sold it some years later for 450,000 Rand. So that was quite lovely. Even if you take the interest rate that we'd paid on the bond into account, we took that, we then put that down on our current residence, which is in a very, very nice estate in Somerset West, and we built. And we did that because we knew, and we guessed correctly, that we were going to save packets of money. But the reason that we did it, other than, yes, great, we know we're going to save packets of money because we know that builders quite often charge commissions on construction, sand, bricks, whatever. But my husband was available to project manage. And that alone is why it worked out for us to do like that. Would I be right in saying that unless you're in the property game, buying a piece of land and building for yourself first time round, is it as easy as it looks? Or would you suggest for first time buyers, it might be more sensible to buy a finished property?
If you can buy a piece of land in Pringle Bay for 80 and sell it for 400, you should definitely do that.
We were so lucky. Actually, that was an investment. We sort of toyed with the idea of moving there, but it wasn't practical for us. We ended up paying $500,000 for a plot, and then we built ourselves, and we still paid a hang of a lot less than what the house is actually worth. So I think, I would say from the experience of a first-time home buyer who actually built their own, that certainly if you can do that and you can project manage it yourself or get yourself a good project manager, then I suppose if you're looking for something bespoke or if you're looking to save a bit, then yes, sure. But if you're not experienced, it can be a disaster, I'm sure. You've probably heard or know of horror stories where people have bought plots and tried to build themselves and it's come down in a screaming heap. Would that be true?
That is 100% yes, Erica. You were in a good position that your husband has been part of the project. And like you say, in the industry, you could then get, your building material at a better cost. So for first-time buyers, financially, if they can do the vacant land, yes. However, buying a house that is ready to move in will be then a much better choice to go through the construction that you went through.
And I think the pitfalls too. I mean, if I think about it, when you self-build and you're using contractors and they are NHBRC registered and you think you've done all your homework, you've checked around, other people have used those builders. But can I tell you guys, it is not for sissies. It is not for the faint of heart. We had, I think, 7 roofing contractors that we fired before we found someone who actually did a good job. Our plumber was a disaster. I would imagine that there are situations where people end up with a plot of land with some bricks and a half-finished foundation that are then trying to sell because they've gotten themselves in trouble. Would you have come across such situations as that, for example?
Yeah, we often do. And it's sad actually, because there's a lot of money that was invested in that property, that land alone and then material. If you do not have the contacts, if you don't have the right people to assist you, I would rather do the conventional way of just buying a house and moving.
And I think a lot of first-time home buyers as well, they need to do that.
That is absolutely right. So what often also attracts people is they see, but that land's only 400,000 or 500,000 and that house is $1 million. For first-time home buyers, access to finance is a big, important factor. And when buying land, the banks almost certainly do not offer 100% loans. So there, again, typically they'd be doing something like 60% loan to values. So the requirement for cash as a deposit and all those things definitely contributes more. So first-time home buyers, if you want a brand new home, buy a development, especially now. Given the buoyant property market, there are a lot of really lovely projects that are available. And the added benefit of that is that you won't have transfer duties.
What is a good development that you've got your eye on? If you were a new buyer and you were looking around Cape Town, has anything caught either of your eye as a really good investment, that the current asking price while it's under development is really reasonable and it's a growth area? Any hot tips?
This is so dependent on where you want to be. There are a lot of new projects coming out of the ground in many, many areas. So there's an absolutely wonderful building. It's a transformational development happening in Para called The Wynne, WYNNE. It's an absolutely fantastic project. It's right across the road from TFG. The high school is right there. There's tons of those that are coming out everywhere.
What I've also seen that our Woodstock area is becoming, it's really being built up quite nicely in the affordable bracket, depending on the apartment that you would like. So for the young first-time buyers, if you are looking and you are working in the CBD, then the Woodstock area, the developments in that area will definitely suit you.
There we go, Woodstock and Wynne in Para. Those are for the win. There are 2 last things that I do really want to touch on. The first is avoiding big mistakes. So what are some of the biggest mistakes that new home buyers can make and how they can be avoided? And then the last one would be, what is the best tip or advice that you can give someone buying a house? And I think we've looked at so many tips today. Your affordability, doing your calculations correctly. But let's start with some of the biggest mistakes that you've seen new home buyers make and how they might be able to be avoided.
One of the biggest mistakes that buyers make is, buying an overpriced property. Always do your research when buying a home and then look at other properties that are selling for in that specific area, and whether the property you are interested in has additional elements, that does increase the value. So look at that. Do not buy a property that is overpriced. And then other mistakes are also check whether any extensions or carpets do have approved plans, and you're not going to walk into a property that has got all the bells and whistles, but then at the end of the day, it's a nightmare. Then you need to get the builder to get approved plans, and that can cost you. So always check with the agent or the homeowner whether there are approved plans for any alterations on the property. Then many people also buy houses in areas that they are not familiar with, and then they later realize that there are many issues, in that specific area. It's important to do your research and possibly speak to the owner and the neighbors regarding any issues that the area might have.
Great, thank you. Dominique, is there anything you'd like to add to that?
Yeah, I think that's really good advice. The other one that I'd probably recommend is when people who are life partners are buying together, but not in a traditional marriage or in a formal marriage, that it's important to have an agreement about what would happen if anything would occur to that relationship, and just write that down. And to be prepared to say, if I decide I want to go live overseas, or if, I don't know, whatever happens, this is what we're going to do. And these are the principles by which we will decide what to do at that time. It doesn't have to be an overly legal document. Have a conversation, be upfront about them, and write them down. And then put that away in a cupboard somewhere in your Google Drive or whatever. And hopefully you'll never need it. But if that day does come, having had that conversation will make that difficult situation less difficult.
We've run out of time, which is hugely unfortunate. Is there any parting piece of information that you feel we haven't covered that you absolutely are burning to let our first-time home buyers know before we wrap up?
Be financially ready and save. If you can save up for the cost involved in the transaction, that would really be an advantage. And then do your research regarding safety and issues in the area. We as real estate agents and the bond originators are there to guide you and to assist you through this buying process.
I'd support that. Homeownership is a wonderful experience, but if you're always on the financial edge, it's less wonderful. So having a savings mechanism, even, so we've spoken a lot about savings so that you can have a deposit, you can pay for the costs. There are things going to happen when you have this property that are going to need attention. And so really wonderful advice, as someone much smarter than me gave me early on, said, save a little bit of money every month towards that home fund. And then when something happens, you need to replace a carpet or fix a window or whatever, your experience of home ownership will be better. A savings mentality in line with your home ownership experience will dramatically improve what that means for you and for your family.
Wonderful. Dominique and Nicolette, thank you so very, very much for your time. This was immensely informative and useful. And perhaps we can catch up again at some stage to work through some of the other stuff, but super appreciate it. And wish you all both the very best till then.
Thank you.
Thank you for having me.
Buying a home is a massive responsibility. It's important to be realistic about your financial position and to carefully research the area and the price bracket you're considering. The more prepared you are, the stronger your position as a buyer will be. Bond pre-qualification is a definite advantage, and negotiating with the seller is important. Make full use of the cooling off period during the purchasing process and think rather than feel your way to a final decision. The more prepared you are, the better the outcome will be. Remember, choosing a home is among the most important financial decisions you will ever make. Thanks for listening, and be sure to catch our upcoming episodes on Spotify and YouTube.